Hello, everyone, and welcome to this edition of Investing and Trading Live. As always, my name is Josh Lilquist. What we are going to do today is a few things. We are going to do a market recap. As we know, the market is closed. We had a phenomenal week in the markets. Actually, the major markets showing a little bit of green, and it's not as green as you would think compared to the weekly chart. They are green, but not that much. So we're going to do a quick market update and recap for the trading week. I'll bring in my special guest on the show. I will hold his name nameless until I bring him on the show, but he's sitting here with me. We'll do some different options trades, futures. We'll look at some other stocks. We'll check out what he's looking at as far as his strategies, whether it's short-term, long-term, and his insight on what we might see moving forward. But we'll do our major market update real quick here. As we know, there is risk in trading and investing. You can and will lose money at one point in your life. This is strictly for entertainment purposes only, mainly mine, but hopefully you find it entertaining as well. Basically, all I'm saying is this is not my responsibility. This is 100% yours. That being said, S&P 500, we're looking at SPY, the ETF for the overall market. The closed the week at 431.50. Really at the middle of the price for the price action of the week. So basically what happened is prices, the week actually gapped down. We had a major rally at the beginning and then really sold off, we'll call it the last 2 days of the week, Thursday and Friday. So S&P 500 doesn't look it wasn't as good as it actually kind of looks on a price chart. So yet then again, it was up on the week, closing at 431.50 as we speak. The Dow Jones Industrial Average, the ETF, we're looking at with this one, same thing, gapped lower on the week and closed higher, showing a positive week. Same thing Thursday and Friday. Major weakness Thursday and kind of an indecision day on Friday with prices gapping up ever so slightly, showing some good strength. Closing as a red candle on Friday, but then again, it technically was positive for the day on Friday. That's your Dow Jones. The NASDAQ, which is the Qs, the triple Qs, closed a little bit different here. Actually, this one was also down, just like in the S&P 500. Was down 0.5% as far as the S&Ps. The NASDAQ was down 1.26%. Closing the week, as I mentioned, down. But the price chart looks a little odd here. Price chart actually show, my mistake, 1.26% on Friday. But the market closed up ever so slightly. Really what happened is the market closed on last Friday at 364.72, right around there. And today, on Friday, it closed at 365.18. So very, very small gain with the S&P 500. Same thing. That one gapped lower on the week, showed major strength at the beginning of the week, and then closed the last two trading sessions in the red, in the negative. Actually, a big drop on Friday. So that brought back, that gave away a lot of those gains for the week. The IWM, which is the Russell for the ETF for the Russell. Got my words backwards there. This one was actually took a pretty big hit on the week. It actually opened lower than the close last week. It opened up right around the $170, $170 area. Showed some major strength at the beginning of the week, but then just totally sold off towards the end of the week. Actually 3 days in a row, Wednesday, Thursday, and Friday. Almost 1% down on Friday. So some weakness in the Russell, which has kind of been the weaker of the three for the past few months here. So we are seeing a little bit of indecision with all the major markets. We'll get into some other ones. We'll check your commodities here today as well. But that being said, that's your market recap for your major indexes. I'm going to bring my special guest on the show here today. Cam, how you doing today?
I'm doing great. How are you, Josh?
I'm doing really good. It's nice to have different people on the show. I did a show with Troy Davenport this week. We talked about some options. And I know you do some futures trading. I believe you do some options trading, Forex, stocks. I mean, you pretty much the whole market, a lot of crypto. And insight on the crypto market. Probably won't get into that much. Maybe we'll look at Bitcoin and just see what your thoughts are on that. But what are some of the things that you were looking at this week as far as the great move up at the beginning of the week and then really changing the course on Thursday and Friday?
Yeah, totally. So I'm both a short-term trader and a swing trader. I do mostly my short-term trading in the futures market and then my swing trading in the options market. So simultaneously, I may be long on a day in the futures market, but for the longer term, maybe even short on or have some puts going in the options market, which is certainly the case for me this week. So this week, what I was doing is I was trading long in the futures market on that nice rally up, recognizing that we had an overhead supply level waiting for us, which is where I entered in some puts on the triple Qs on Thursday. And so even on Thursday and even on Friday in the futures market, I was taking some longs, some short-term longs, and those worked out really well, in and out of the market very quickly, same day, matter of minutes, or I think the longest position I was in the futures market was maybe an hour. And then simultaneously, I have this longer-term short position or puts going on the triple Qs, which started to really start to manifest on Friday.
Yeah, I like that. And as you're talking about this, we're talking about investing, trading in positions before they actually turn, before they move to the price that you want to go to. And so it's not like, hey, we're talking about some trading investing, go do that right now. That would be the total wrong thing to do. That being said, what he's talking about is having two different, I don't want to say two different biases, but it kind of is. You have a longer term bias with something, but you're seeing a shorter term opportunity with a different market, which is kind of like a different vehicle.
Absolutely, that's exactly right. So what we do is what I do is I really look at the markets on multiple time frames, right? So the price data is fractal in nature. So on one time frame, the markets may be generally going up, and then on a higher time frame perspective, the overall market direction may be down. You can definitely play both of those sides, though.
Yeah, I mean, just looking at your QQQ, the NASDAQ ETF, you're looking at a daily chart, that's technically in a downtrend. You have lower lows and lower highs. You look at a really short-term chart, we'll say like an hourly chart, and most recently it's either sideways or just turned up. So and so just using those different time frames for different strategies in the market, I like that. Are you looking at the major markets, or do you look at any other stocks or any currencies?
I certainly look at different stocks, mostly just for options plays. This week I did a play on NVIDIA. I'm still in a couple other plays as well. Most of those trades typically last a couple weeks, and a couple of them are in great uptrends. I got some nice long calls, and then some of them are in downtrends, and I have some long puts on as well. So mostly I'm looking at the overall markets, the S&P 500 and the NASDAQ primarily, and those are my main trading vehicles. But individual stocks may be doing other things beyond what the index itself is actually doing. So.
Yeah. So you're throwing out a little bit of terminology for some of our newer listeners if they don't know what a long call is. So you're talking about an option strategy. Explain what a long call, what that actually is.
Absolutely. So basically all it is you're buying a call. So you have positive exposure to the markets, meaning that if the markets go up, the single market that you're trading, and you have a long call, then you're going to make money on that call position as the market goes up. Similarly, if you have a long put, I'm buying a put and I'm actually having a negative exposure to the markets, meaning I'm going to make money if that market goes down.
I like that. One of the strategies that I've been talking about for really a long time on the show here, but we've been looking at the stock Target and just some options that we did on that, selling puts on it, basically cash secured puts. And so that strategy, so it's more terminology for you here, but that strategy is you're basically getting paid to wait. So if, for example, price is at $116 and you're willing to own Target, let's say in this example, say at 105, there's a strategy to sell a put at that 105 strike price. Now, what happens if price gets down there within your time frame before expiration? There's a chance that you'll get that stock at expiration, which means you would own that stock based on how many shares or how many contracts you did. Each contract controls 100 shares. Or what's sometimes even better yet, I mean, if you're willing to own it, this strategy usually is something that you're willing to own. But if you don't get it, so basically if price closes above 105 at that expiration date, you were paid a premium up front, you actually keep that. So it's kind of like an income strategy that a lot of people will use in their retirement accounts. I would call it a very passive strategy, and that way it's kind of like you're collecting income and not even necessarily having to buy and sell stocks.
Yeah, absolutely. I mean, that's one of my favorite things to do. It's like who wouldn't like to get paid to wait, right? Is that if you want to own something and you're looking at a price chart and you're saying, you know what, those prices are too expensive for my blood. If prices come down to this level here where I'm more comfortable buying something on sale at a discount, something that's quality, who doesn't want to do that? Mm-hmm. Who doesn't want to go to the store and see a good sale on something they want to own and then buy it there? Rather than waiting for something to go on sale, I can actually get paid to wait for something to go on sale. It's a phenomenal strategy in the markets.
Mm-hmm. So you mentioned something there. I want you to kind of unpack a little bit. You mentioned just the term "too expensive for my blood." Now, there's a lot of stocks out there that are pretty expensive, even though stocks have started to come down. I mean, stocks are really down from the highs for the past couple of years here. But, for example, let's just say NVIDIA. You mentioned NVIDIA earlier. That's a $454 stock. So let's just say, actually, why don't you explain why? I've had a couple other of my guests do this as well, and kind of explaining what their meaning behind using or why to use options. But explain, let's just say if a stock is too expensive and you want to use options to get into that stock, explain how that leverage works in your own words.
Sure, and to even touch on that a little further, I'd like to just go into the comment about something being too expensive. It's all relative, right?
Yeah.
And so if something is...
Well, it's a business decision, too. Be
smart
about it.
Right, and so it's about the product that you're taking. Is $400 plus dollars for NVIDIA too expensive? Is a $10 stock a better deal? That's really the question. And to me, it really all has to do with the chart, right? The longer term charts, they're going to really tell you the quality of something versus if something is, inexpensive or too expensive. You're going to get to gauge that on the charts based on what the direction of that chart is over time, the longer term approach.
So just to give example, as you're kind of gathering your thoughts here, to buy 100 shares of NVIDIA, you're tying up $45,000, which really isn't that efficient, unless you're using a several million dollar account. But say you have a $5, $10, $15, $20,000 account, you can't do that. So options might be a better opportunity to participate in the move of NVIDIA.
Absolutely. And so options just give you the ability to be more capital efficient. Stocks are very expensive in and of themselves because you have to pay the price of that individual stock per share of stock. Whereas if you go into the world of options, you get a starting leverage of about 10x. So you're going to get a discount, basically a discount of 10 times what you would pay for that stock. Now, there's other stipulations and things that you have to be very aware of if you're trading options. It's not something you can just walk into blindly. You really need proper education to be able to start trading options. Trading really any leveraged asset class really requires proper education, but with that, you can be more capital efficient. I can put up maybe $4,000 or $5,000 versus putting up $40,000 or $50,000.
And you're not risking that, correct?
I'm not risking that. That's just to get into the trade, right? So my risk on any individual trade, whether if I'm buying the stock and putting up $50,000, or I'm buying an option and putting up $5,000, actually my risk on the trade is going to be the same amount.
Yeah, and you're controlling the same amount of shares as well for much less capital.
Correct.
Which is capital efficiency. So as he's saying, expensive is really relative. A smart business decision is to be efficient with your capital and using that wisely, and that way you can get into other positions. Then you're not married to one particular stock. So that's kind of the options market. Are you looking at any futures contracts other than the S&P 500 or NASDAQ, at any commodities? Matter of fact, let's real quick here. I was looking at just actually talking about gold the other day.
I was going to say, we have to talk about gold if we're going to be talking about the futures markets this week.
Yeah, well, actually was it Tuesday, for our YouTube listeners, we were talking about a long that we identified in the Discord on, it was either Monday or Tuesday. And this long, it was right around the $1,810 area. It was a zone there. That has actually shown now a 7 to 1 opportunity. So I mean, gold really has soared here this past week, and it's really coming off of supply and demand. It was textbook off of that. Now, why is supply and demand so critical in the market?
I mean, supply and demand is the market. It's every single market out there. For people to think that the equities markets don't operate on this fundamental law of markets is just quite foolish. And so supply and demand really is everything. It's how price moves in a market. If there's more buyers than there are sellers at a certain price, prices have to go up. There's more demand in the market. So prices have to meet that demand because the markets are competitive. So if there's more willing buyers than there are willing sellers, well, now price gets bid up. It's like an auction, right? Is that people are bidding for something at a certain price, and if there's a lot of people bidding on something, prices will continue to go up to meet that demand in the market. And the same is true in the equities markets, and you can actually read this on a price chart once you learn, the proper way to analyze the markets through supply and demand.
Yep, and current price of gold right now, the spot price is $1,932.40. Silver, $22.71. This one also spiking up, but not necessarily. I don't really see a demand zone on any of the time frames that I'm looking at, so probably not much of an opportunity to get into a trade based off of that, but there's always opportunities, and you might just find one based on your strategy. If it's a shorter term strategy, I'm looking at higher time frames on most of these. So that's your gold and your silver market. Current price of oil, that had taken a drop here over the past week. Let's see what it did on Friday here. Actually, so it did the last, I'd say, 2 weeks here. We've shown we did originally show a drop of about 12%, but on Friday up almost 6%. So really showing some major strength. As we know, the issues with the new war and all that stuff. That's what the news is calling it anyways, the new war. It's unfortunate what's happening over there, but oil prices showing their head again on Friday, showing some strength.
Yeah, absolutely. And I mean, I think that all the talking heads on news, they're always going to find a reason for why prices moved after the fact, right? Yep. And so they're always telling you why something moved after it moved. What we do is we look at the price charts and we identify where something is likely to move before everybody else starts talking about it. Yep. If you are watching it on the news, if you're listening to the news, you're too late, quite frankly, right? And so the longer term trends on oil are all up. There's nothing really in the way, nothing stopping it. It is on a tear. It's likely going higher. And, for traders, that's great news. For people at the gas pump, not so good.
Yeah. Real quick, Bitcoin. We're seeing a slight uptrend starting. What's your thoughts on Bitcoin in the future?
Bitcoin is an interesting one, and we're kind of in this decision-making mode for Bitcoin. Just from a fundamental basis, kind of my overall thoughts on the general market strength and where the markets are at, and seeing some of the trends occur in gold and in the equities markets. I think that there is a extreme bull case for Bitcoin. If it is recognized as kind of a safe haven asset like a digital gold, I think that you may see some pretty sharp price rising in Bitcoin in the near future here, but we are in between two levels right now. So you have demand holding on the downside and you have supply holding on the upside. We're kind of caught right in the middle of that. So only time will tell what happens to Bitcoin here. I think it could really go either way, but I think that there is quite a bull case for Bitcoin as well.
Yeah, and mentioning that it could be the digital gold, the safe haven. And quite frankly, gold really hasn't been the safe haven, hasn't really been inversely correlated with the markets lately. So maybe that is the case with Bitcoin. But I appreciate your insight coming on the show here today. We could talk about this for hours. I know you got a busy day, lots to do here, but thanks for coming on. And we'll do a market update Monday morning. We'll probably do a show Saturday, or we'll run Saturday, Sunday. We'll run shows every single day here. And as always, collect your profits when they're given to you. Protect your losses, keeping them small. Until next time, retire young, my friends.